Okay, so this is going to be trade review for Monday, June 17th, the New York trading session. Okay, so let's transition over. All right, so let's look at what the performance was today. Okay, so this is simply a PDF pulled from Tradovate for today's trades. So Tradovate can be just a little bit tricky about how they display trades, because you could be in one trade with like 2 separate limit orders to get out of the trade, and it will count it'll count each of those limit orders that get hit as your take profits as like separate trades. So that can make it a little bit tricky, but either way, it's not going to count a win as a loss and a loss as a win, right? So but just keeping that in mind. Okay, so this is for today, for June 17th, Monday, New York session. So as you can see here, total trades I took, it says 7. I actually took 4 actual trades, but again, because of the way the limit orders are, it's going to count each of the exits as a separate trade on its own. So that's fine. We'll just work within those numbers. Okay, so we'll just call it 7, even though it wasn't. Number of winning trades was 6, and number of losing trades was 1. Okay, so I can say that I followed all of my rules in trading today, with the exception of 2 trades that I took. So 2 of them were kind of like basically me trying to jump in the middle of price action that was already kind of playing out in a particular way, and trying to scalp it. I typically ruin my performance or my accounts on what do you call it, on scalps. So I'm not really surprised that I took this hit right here. But we'll just go further down and just kind of look at all of this before we really break down the actual trades. So winning trades 85%, losing trades 14.29%, reflected here. And basically it just kind of does these deeper breakdowns, P&L history. But this is all just for today, keep in mind. Okay, so just further breakdowns, P&L distribution, P&L per time of the day. I traded, I'm usually marking my charts up between about 8 o'clock and 9:30, and then I'm typically trading between 9:30 and 12 o'clock, and hopefully getting out of the market before 12 o'clock when possible. Okay, so this is the gross loss breakdown, and then we can see here, these are the actual exactly when I got in the trades, exactly when I got out, and what the P&L was for each of these transactions here. Okay, so now that we've looked at that, let's jump back into I want to just like look at my charts here and look at the actual trades that I took. Okay, so let's see, 1 second here. Okay, so let's just minimize this so I can see what the hell I'm doing. All right, cool. All right, so the charts that I really like to let's just break it down, okay? And I'm gonna treat this kind of like a visual diary, and we'll go through exactly everything that I looked at this morning, how I came to my bias and why I traded what I traded. Okay, so the first thing that I like to look at in the morning is I want to know the schedule of the day, just because you can look at the holidays and that should make it pretty clear, but sometimes I get caught off guard. So I like to go onto the marketclock.com, CME futures NQ, and I just like to make sure I know exactly what the market hours are for the day. The next thing that I move on to check is I look at the futures economic calendar. So today being the 17th, this is all in CT time. Keep in mind on bar chart here. This is what we had on for news today. I don't really honestly like I don't dig too deep into whatever the news is going to be. There's certain things that I consider to be like heavy news that needs to really be respected, but to be quite honest with you, most of the news that comes out Monday through Friday, I'm not really too concerned about it. I do check it, but like this here, what we see on the calendar for today, this would not make me do anything differently for the day. But I do check it just to be sure about that. All right, and then I like to look at the Fed calendar. So Federal Reserve for the 17th. Again, there's nothing here. I look at it for the Fed calendar. I'm mostly concerned with FOMC, which we just had. So again, like for today, there's nothing here that I see that would make me necessarily avoid the market or trade differently than what I normally would. Then I like to go over to earnings, and I like to look at if this were not a Monday, I'd look at the previous day, the current day, and then I'd look at the day after. Usually at the beginning of the week, I do like to scan through the dates just to get an idea for what's coming up so I don't get caught off guard. There are just, as you know, some movers and shakers in the stock market that will, when it comes to Nasdaq or the S&P, it will just quite literally carry, you know what I mean? So want to be sure about any earnings that are coming out that I really need to be paying attention to. In terms of today, there's nothing that I really saw that I felt was coming from any particular company or any forecast of earnings that looked like it would just shake the market. So I wasn't too concerned with that for today. Moving forward and looking over at Tuesday, June 18th here. Again, I don't really see anything that stands out to me that would make me do anything differently. But again, like I like to know, and these are the things that I look at. Okay. So that is primarily what I look at. I also like to keep tabs on what is it? The options. What did I just click? Let me move this out of the way. I like to look at options expirations just because the market gets pretty funky when you have options expirations. And so I don't just look at indices, I'll look across all of these different futures options expirations, but I do like to keep a pulse on that as well. Okay, so that's typically, that's what I'm checking on a day-to-day basis. And then I like to keep my trader view up just because I will write notes I don't like they just changed my settings, and I don't like that. I don't. All right, I guess I'll mess with it later. That's fine. But I do like to keep this up, and I like to write notes here. So we're gonna go over today's trades, and we will notate them. In terms of TraderView is great for really tracking your progress and looking at the specifics on how you trade very specifically, and keeping an objective thumb on your profits versus your losses, the time of day you do really well, the time of day you don't do well. So you have like a really unbiased look at it on an ongoing span of time. So I really like TraderView for that reason, but unfortunately, when I primarily switched over from ThinkOrSwim onto Tradovate, it wouldn't import my trades, so I haven't really been doing that with TraderView, and I like stopped paying for it. So because that was like if you can't track everything that you're doing, if you can't import it, it just kind of makes it pointless. So I primarily I just use this as a journal now for the most part, but hopefully they'll fix whatever kink was going on with Tradovate, and I'll be able to import at some point. It was the same issue with ThinkOrSwim before, and they fixed it. So hopefully there will be a fix there soon at some point. But anyway, so let's jump into how I break my charts down. The first thing that I personally like to look at, I keep charts up of the following, okay? I like to look at the 1 hour and the 15-minute bar chart. I feel like there's just certain information that you can kind of clearly see from these particular bars that you don't as clearly see with candles. So, one thing I'll look at when it comes to bar charts is, like, for example, if let's say, like, where's 9? Let's find 9:30 here. So if this is our opening candle here, right? And let's say I'm bearish for the day, then, well, we'll use a real case scenario. I'm bullish for the day, right? This is our opening candle right here. Now there's well, maybe we can move over to the 15 minutes so we can be a little bit more precise about it actually. Okay, so here, this right here, this is our opening candle. So let's blow this up a little bit. Okay, so right here, this is our opening candle. So if I'm bullish for the day, I'd look at this bar and I'd say, if this is where we opened, any of my buy orders should come below this bar here, right? And as you can see, any order that you would have placed, any buy order that would have been placed for the day underneath this level here would have been like a premium place to buy. So I like to look at that just like at a glance. It kind of just gives me that quick information. I like to look at, I'm just going to break this down like in this first video just for anybody who's going to be like following along, just so that you understand what it is that I'm looking at and how I chart, how I come up with my bias for the day, etc., etc. Yeah, okay, so then we go into this chart here. This has this one screen holds 4 charts, and so here I like to look at Nvidia. I like to look at what Apple is doing. I like to look at the 10-year Treasury note yield, and I like to look at the volatility S&P 500 index in comparison. So I use these four charts in conjunction to just further support whatever my premise is of the day, or even just from moment to moment decisions. It just depends. If VIX and TNX are doing the exact opposite thing, then I'll put more weight on it. if they're doing the same thing, then I would just kind of expect a not so clear market, or to expect for it to be a little bit tricky and to just kind of be careful. Okay, I also keep up a my daily and my 4-hour chart. So the daily was really where the basis of my bullish premise came from. If I just remove some of these things here, over here on the daily chart, I'll remove this arrow, I'll remove this extension, and what we can see is that on the daily chart, we were clearly bullish, right? And we did this nice pullback right here in bullish conditions. And so what I did was I ran the fib. It's not going to give it to me. Okay. I ran the fib, and I'll just do it again, on this pullback right here. I'm trying to get it exact. And running the fib on, let me just make sure that's exact because I'll end up using this again. Low is 24125. Okay, that's close enough. All right, so basically, when instead of using the actual fib extension, I use something that ICT teaches where you just flip the fib upside down from the leg that you're looking to measure. And I actually like this method a lot more than the actual fib extension. It does give slightly different levels, and I found this to be really reliable. So anyway, based on this flip here, this fib extension that I run, I was looking to see the market hit this level first and then hit this level second. For me personally, like once it hits, especially the yellow, I'm not holding out for that trade anymore. I'm pretty much done. But that's in large where my bias came from. Okay, so, and I've got my channels obviously drawn here. My charts are not perfectly clean. They get messy, okay? And then we've got the 1 hour and the 30-minute. So I like to look at those as well. I like to look at the 15. I will also map out order blocks and Fibonacci retracement levels in both the 15 and the 1 hour time frame. And once I've established whatever is going on in the higher time frame, by checking, just doing an analysis on the daily and the 4 hour together, and then doing a deeper analysis on the 1 hour and the 15, then I'm primarily trading between the 5-minute and the 3-minute chart, and using the 1-minute chart in conjunction with that as well. Okay, so I wouldn't want anyone to, like newer traders, to look at this and think that like this is how you have to trade, this is what you have to be looking at. This is just over time. This is what I like right now, and this is what I feel works best for me. I also like to look at a tick chart over here next to the 1-minute chart. And the tick chart I will primarily use for, I like to know when we hit really deep or really bullish levels on the tick chart. So for example, like if I see the tick chart get close to 1,000, negative 1,000, or actually hit that, I'm probably going to be bullish. And if it's, the opposite, if we get up to like 1,000 on the upside, even like 600 to 1,000, I'm probably going to be looking to take more bearish moves. But again, all of this information, I'm taking all of this in, and I'm creating a bias from all of that information, which I will actually trade from. Okay. All right. So now let's jump into the actual trades that I took today. So let's look at what the first one was. Okay, so looking back at this chart here, we've got the first entry being, let's see, I'm a little distracted. Okay, we have the first entry came at 9:47, and it looks like it was a did I short? All right. It was a sell. Okay, at 19,661. So let's look at that. 19,661 at 9:47. All right, so let's line this up. Jesus Christ. Okay, so there's a lot going on my chart. Let's just try to clear this up a little bit. Okay, so it looks like it was a short at 9:47 was the entry time. So let's open this up on the 3-minute. All right, it's all coming back. It's all coming back. Yeah, I do remember. I remember being bearish right here while I was waiting for the move that I believed would launch us up into more of a bullish market. Okay, 9:47. So somewhere between here and here, I entered the short. And we know that the exact spot is going to be referring back to the PDF we were looking at earlier, 19,661. All right, it's not just me. This is being like sticky. Okay. All right, 19,661. So that tells me, like, based on the way that this looks, this was probably a 1-minute entry. So let's go back. Let's go to the 1-minute chart. And let's look at 9:47. All right, so 9,661 even. All right, so we got in about right here, and the exit was okay. So there were 2 separate entries, and the exit was Okay, so 19,650 it looks like. All right, so all right, so that was the exit, and I'm going to have to presume that even though this is the way the trade went, the way I would have set this up is this would have been the pullback. So the stop would have been above here, above this candle here. And that high is 687. So that would have been 92. So the stop would have been there. And so I imagine what happened was I trailed it, and then I just ended up getting stopped out of this trade. So ideally the goal would have been to see it go at least a 1-to-1 right here, but it ended up getting stopped out. Okay, but it was still a profitable trade. So that's trade number 1. So there's not really, this is essentially me just trying to get inside of a bigger move that I see happening here. So basically we had like this shelf created. We're moving down. We had this this pullback, this break of, or rather, I guess we'll call it a break of structure. And then we got like this massive move down. So it just didn't really work out for my entry, but overall it looks like the general kind of thinking and premise was right. I just didn't go the distance I would have wanted it to go. So if we're gonna let's just add a note about this trade. So we'll just say entered, just be very specific, entered short in the 1 minute based on 15-minute, 3-minute, and 5-minute price action. Trade did not hit intended target. Stopped out early, but profitable. Rules followed for trade, and I don't think we had a re-entry on that. Okay, so let's look at trade 2. So trade 1 I think is fine. Followed all the rules. It just did not hit the intended target. Okay, so let's go to the next one. So the next trade that was taken would have been okay, so this was a buy order. I think this was an early stop out as well. So got in at 10:07 at 19,693. So let's find 10:07 here. $19,693. Okay, so ended up getting, understand what the basis of this. Okay, so basically by the time this has occurred, what I'm seeing is we dropped down so it looks like 10, 15-ish. Okay, so we had this really crazy drop, but it wicked all the way right back up here. Now this right here represents a Fibonacci retracement level. I do 62 to 78%. I don't typically include 50%, but we can see there's a lot of play around the 50% area. So essentially this whole territory is pretty much a bullish area. And so that's what we're seeing here. Because this chart is mapped out on the 1 hour as opposed to the 15-minute, it misses some of the little pockets that you'll catch if you chart on the 15-minute chart. All right, so I like to go between both. I like to have both up as a visual. But this general area right here is basically all bullish area. Okay, so going between the two charts, I know that. And what I'm really looking at is I want to see, I'm looking for kind of a continuation on the move up. So let me see exactly where we got out at 19,669.50. What did I do? Hold on. Let's look at the entry again. Should be 19,693. Oh, got it. I have it a little bit backwards. Okay, so this was it was 19,669.50. This chart's kind of hard to. And I have it set up as such. All right, 16. $19,669.50. All right, that's our entry. And then I ended up getting out at 19,693.25. Okay, and based on that, I'll be able to know where my stop is at, because that's a very uniform thing for me. Okay, so here we are, and we know that the trade started at so this was actually 9:57. So it should have been closer to right here. All right, that's perfect. Okay, so stop would have been below here. Let's measure that out. And I think this blue line represents where I had placed my stop. So again, we have a bullish premise on the day. We've done a nice pullback. We've run the liquidity on London and Asia's low for the day. And so now I'm switching modes at this point into my main premise of the day, which is bullish. Okay, so the way that I would determine where I want to get out of this trade is, because it came off of this move right here, I'd measure the previous leg that led down to that. Okay, so fib extension, and this would be my maximum target that I would be looking to hit. So this would be the first target right here, and this would be my second target. Okay, so this, however, is not where I actually got out of the trade. So what happened in this trade was I decided to trail it very closely, and then when we got a pullback, I just, it knocked me out of the trade. So I didn't hold for this whole move here. So we're just going to notate exactly what happened on trade 2. Okay, so trade 2, we took a long position in the 3, using the 3 and the 5 minute chart. All right, in the 3 and 5 minute time frame, based on the 15-minute bullish order block and fib retracement entry. Okay, so that's why we got in the trade. The trade was trailed, stopped out early, but profitable. Trailed trade to lock in profits early and reduce drawdown since trading with NQ contracts today. I don't think that there's nothing that I would have done differently. Except if I was trading with micros, I would have let the trade run as opposed to trailing it. So my goal is, when I look back at these trades, I want to be able to identify exactly why I got in the trade and why I managed it the way that I did. Okay, so that's trade number 2. Okay, so then there was a trade that I entered, and this was when I entered this scalp, and I know that the scalp didn't make sense, so I'm not going to try to analyze it and like break it down, because I know why it lost, because it was a scalp that didn't make any sense to enter. Okay, and so the last trade that we have here was another one that hit my stop really early. And let's see, so the entry, it would have been a long, because at this point I was definitely fully all about the long positions. Okay, so let's see, I think it was these 3 right here. And this is at we have a small $45 win. We'll just look at that as kind of like a break even as well. So 11:31, we basically, let's see, where did I enter that trade? 11:31. All right, so somewhere around here, and I do recall it was based on a 1 minute entry, because I was bullish in the 3 and the 5, and I was waiting for an opportunity to get inside of that movement. So somewhere around 11:31. So we got the pullback. To the 20 moving average here, and waited for the secondary candle. And yeah, so this trade was entered here. Stop would have been there. And And same thing, I would have just run the extension there, and this would have been the very last level that I would have held it to. But I was very cautious with this because we were getting closer to 12 and I didn't want to end up getting stuck with the losers, so I figured I would take a chance on it because I like the way it was setting up, but that I'd set a break-even stop super early, and I did. I think it was as early as like right around here in this area, and when it pulled back, it knocked me out of the trade. So as you can see, I mean, the trade would have gone well, but I just wasn't willing to hold it and take the risk because of the time of day. All right, so the two scalps are the trades that I do not agree with, that I should not have taken. But it looks like the overall premise of the day was correct. Whether or not we actually hit this mark or not, as you can see, it was enough for us to be able to get inside of multiple trades and make a good profit. Okay, so that's basically how the day went, and that's the analyzing of my trades. So trade 3, we'll just say, got inside of 3 5-minute time frame move for bullish push using the 1-minute time frame during a pullback to the 20 moving average. Trailed tightly as soon as we entered profit. Did not want to take on much risk due to time of day. Rules were followed. Okay, so all in all, I can say, like, except for those 2 scalps, we followed all the rules today. It was good. I checked everything that I needed to check, and we stopped when we were up, which was good. The only thing I would do differently is, like I said, if I was trading micros, I probably wouldn't have trailed so tightly, and I definitely wouldn't have taken those 2 scalps on the day. Yes, okay, so that is it. That is it for the day. So that summarizes the trades that were taken, the reason they were taken, making sure that I can go back and still understand why I entered everything, why I managed it the way that I did. That's generally the goal for the day, is I don't want to go back and look at trades and go, why in the world would I have entered this trade? Like, if I go back and I look at it and I don't understand it, then I know that I'm trading deeply outside of my rules. So I'm pretty okay with what we got here on the day, and my current goal right now is to beat an additional 11 more evals. And so that's what I'm working on so far. So I think it for day 1, I think we did great. Okay, cool. Until next time.